I'm really excited today to essentially broker a conversation that is, I think, very interesting. It's a discussion on financial technology. It's a discussion on opportunities in Asia, particularly in Hong Kong. It's a discussion about opportunities in Dubai and Minasa. And it's a real pleasure to be joined by Invest Hong Kong and the Fintech Association of Hong Kong. I will provide detailed bios of my guests later on when I introduce them. But essentially, we have Mr. King Leung with Invest Hong Kong, who runs Fintech Hong Kong, and of course, Helene Lee, who's GM of Fintech Association of Hong Kong. Now, the agenda for today is that I will do my very best to set the stage using no more than maybe 10 minutes or so, talking a little bit about some of the things that we're seeing in each of our kind of jurisdictions and set the stage for the conversation. But the real meat of the discussion will be driven by my guests, King and Helene. They will take us from about the 11:15 mark all the way through 11:45, at least Dubai time, that is. And after which we will leave ample time for Q&A. So without further ado, let me spend a few minutes putting today's discussion into context. I'm going to flip through some slides very, very quickly. So bear with me, please. Thank you. Super. I assume that the slides are visible? Great. So really, you know, one of the reasons why this conversation is really exciting is because we're talking about, opportunities for exchange. And when we talk about the Dubai International Financial Center and Dubai, what we're talking about is the opportunity to access a large market that we call MIASA, which refers to Middle East, Africa, South Asia. And I thought I'd spend a minute talking about a couple of attributes, particularly useful for those who may not be familiar with it. If I were to summarize this section, I would say the three key takeaways are that the markets that the DIFC in Dubai represent in terms of being a hub for is MIASA are large, they're young, they're urban, they're growing rapidly. We as a city, Dubai, and as a financial center have a very, very important location. And of course, we have been able to attract talent by making this place a great place to live and work. And I might add, before I jump in, I say this with the context of acknowledging that our great cities have many, many common attributes, including many of the things that we're going to talk about. But we'll get into that shortly. And so, of course, all of us who are familiar with this region are familiar with whether it is MENA, the GCC, or MIASA, large populations, young, and our demographic pyramids are inverted versus those in, let's say, East Asia, Europe, and North America. The vast majority of our population, 60% of our population is under the age of probably 45 or so, which means that from a business case perspective, these people will be consuming financial services and other services for a very, very long time. And so that drives a lot of the characteristics of our markets. Not surprisingly, where you have youthful populations in emerging markets, many of you are familiar with the growth stories of emerging markets. I won't spend too much time here, but the key point is that our economies, notwithstanding recent developments as well, continue to be growing faster than traditional economies. I think that fact is also well known. That growth rate is, again, projected to continue naturally.
Hi, Salman.
This translates...
Full screen, please.
Sorry? Yeah.
A full screen, please. Thank you.
Thank you. Let me know when that is available. Does that work?
Yep, we're good. Thank you.
Thank you, Clifton. And not surprisingly, the demographics fuel faster growth rates in financial services. So smaller markets growing rapidly. This is the case in the GCC, in MENA, and in MIASA. Rates of growth higher than larger markets that surround us. Again, not surprising. And to put it all into context, what is the importance of the size and shape of markets if we're not positioned to take advantage of them? And so what Dubai has done, and I know that Hong Kong has this amazing tradition as well, is we have positioned ourselves in the middle of these flows in this market. And we've made this place an attractive place to live and to work because, as you know, whether for financial services or for all sectors, what the game really about is for talent. And as a financial center, formed 15 plus years ago, our objective as a financial free zone is to drive economic growth and job creation for Dubai. And so over the last, for Dubai's history, certainly, Dubai and the UAE have invested significantly in the soft infrastructure by multiple rankings of quality of living, destinations, livability, schooling, talent. This is a very, very good place to live and to set up and set up a business. And so now let's talk about how things have been changing. So I told you we are a crossroads economy. I've talked about us being in the middle of flows between East and West. A lot of our traditional development has come from a real commitment from the government to drive economic growth. Pre-digital, pre-innovation, this led to the setup of the DIFC, to set up of rules and regs that facilitate business, and as a result, we were able to scale. Today, this continues with innovation. As a result, there are some attributes here that are pretty amazing when it comes to fintech, I'll talk about, and of course, you have to have the right institutional enablement. I won't dwell on this slide too much, but the key message here is Dubai is very serious about diversifying away from traditional, obviously, hydrocarbon sectors, financial services, aviation, tourism, but also knowledge and services-driven economy. This slide indicates an example of the investments that the government has made in increasing our supply of economic activity from knowledge work. Very, very important. Not surprisingly, we have come to enjoy our collaboration with places like Hong Kong on technologies like blockchain. So we are a small country, a small city-state, but our ambitions are large. We are recognized globally for embracing technology, for the provision of government services, and blockchain is a technology that is near and dear to us. The use cases here are many, but the key message here is that this is actually being utilized in activities ranging from the elimination of paper to the provision of services in a really, really efficient manner. And we continue to invest heavily in this space and to support that initiative. In addition to government-led initiatives, the quirks of geography and demography give us a couple of very interesting opportunities. And again, I won't dwell too long on this slide, but one natural opportunity in financial technology and innovation is in the space of remittances and payments. Why is that? Well, a couple of reasons why. Penetration of mobile phones in this region is very, very high. We all joke about everyone in Dubai having at least 2 phones. The behavior of online purchases continues to increase. And last but not least, the outward flow of currency from the GCC, including the UAE, to top markets like India, Pakistan, Philippines, Sri Lanka, Bangladesh. These are the largest remittance corridors in the world. And so from a fintech perspective, great opportunities abound. Not surprisingly, with the government-led initiatives and the organic opportunities, the amount of funding for venture capital continues to increase, as do the number of deals. And again, I will make my presentation available to anybody who's looking to review this stuff after the fact. Last but not least, and again, this slide needs to be updated as well, things change so rapidly. With the innovation and the investment come the outcomes, right? We are very proud of the continued proliferation of technology and fintech companies in e-commerce and other parts of the digital economy. Careem being the most notable and the largest kind of exit recently acquired by Uber for over $3 billion in 2019. Now, all of this happens because we need the right strategy in place. And our aspiration as the DIFC, the Dubai International Financial Center, is to promote the future of finance from here. And the way we do that is to have the right alliances. So we have alliances, MOUs with HKMA, Hong Kong Insurance Authority, SFC, Hong Kong High Court, Cyberport. These are really, really important. We're very proud of these. And we've had initiatives in place to promote fintech. Region's first fintech accelerator is called the Hive, globally ranked, very successful. We continue to look forward to increasing the footprint through alliances. We have MOUs with multiple parts in the world, and we look to increase that. We have partnerships with Startup Bootcamp, again, a global firm. We have innovation licenses. We have incentives in place, and regs are really, really important. I'm sure we'll get into this in the session. None of this would have been possible without the right regulatory environment. Our regulator is the DFSA, the Dubai Financial Services Authority. We were the first to have crowdfunding regs. Our payments and money services regs are absolutely fantastic. We are the only comprehensive payment and money services regime in the UAE, and interest in this globally and regionally is very, very strong. I talked about the opportunity. We are already in the process of leveraging that. And of course, when you have significant digitization of economies, naturally you have to look at cyber very, very carefully. So there's a lot happening in this space, including a forward look in the next coming months on things ranging from cybersecurity to tokenization. Stay tuned. It's very, very exciting. And look, let me wrap up by making a couple of observations. In 15 years, we amassed talent and capital in traditional financial services, right? We clustered the best and brightest from the region and around the world to develop a core ecosystem. We are in the process of replicating that exact same success pattern in fintech and in innovation. Scale is very important, and if we get these two things right, we'll be able to talk about the future of finance. So here's a reminder for you, right? What makes us able to talk about innovation and fintech is that we've been able to scale successfully in traditional financial services, right? So from left to right, the top banks in the world, the top asset managers in the world, the top insurance companies in the world, the top legal firms, all of this produces the right environment for scaling. And we're already seeing the same success in fintech. Now, this number needs to be updated every week, it seems. But at last count, there's roughly 400 plus fintechs in the GCC, 200 plus in Dubai. Actually, we are now in the DIFC over 200. So we are already scaling up significantly, and we've become the key market in the innovation space in this region. Let me conclude my overview by saying our objective is to continue collaboration globally and regionally. We look forward to conversations with markets like Hong Kong to exchange insights and to cooperate, because that's the right way to grow. We're a competitive hub. We have incredible regulatory legal platform. We've scaled in traditional financial services. We're going to continue to do so by innovating our regulatory and legal environment, and we hope to then scale up in the future of finance. So that's it for me. What I'd like to do now is very quickly pivot, and let me stop sharing first. I'd like to take a moment to introduce today's esteemed guests, and so let me first begin by introducing Helene Lee, who's GM of Fintech Association of Hong Kong. Naturally, Helene is exceptionally seasoned in management consulting and finance. And she's had a storied career that ranges from global firms such as BCG, Boston Consulting Group, and Willis Towers Watson. Before joining Fintech Association of Hong Kong, Helene was MD and head of strategic planning, brand and communications, Asia Pac for BNP Paribas Wealth Management. She has held significant similar senior roles at institutions like JP Morgan Private Bank, and of course, Lombard Odier. I could continue to talk about all the things she's done, but needless to say, she is a business leader and a known influencer, and it's a real pleasure to have her join today's discussion. Thank you, Helene, for taking the time today.
Thank you, Salman. Delighted to be here.
Thank you. It's also a real pleasure and a real treat to introduce Mr. King Leung, who is head of Fintech at InvestHK. Fintech at Invest Hong Kong is a department of the Hong Kong government responsible for attracting foreign direct investment. King's mission is to foster, obviously, a more vibrant fintech ecosystem in Hong Kong and the Greater Bay Area, which we are really excited to learn more about. And of course, has had the opportunity to work with leading global firms, entrepreneurs, venture capitalists, technology firms all around the world. I could go on for a long time. I will say prior to this role, King's tech entrepreneurial career has included some really interesting roles as operator and investor in startups involving AI, big data, insurtech. He was the founder of a data management platform and lead generation startup funded by Credit Suisse. He's recognized in the industry. There are a lot of things that I would love to continue, but it's a really long CV. Let me thank him for coming, and with that, let me turn the floor over to both to King and to Helene to guide us through the next phase of the discussion and talk about cross-border opportunities. Over to you guys.
Great. Thank you so much, Salman, for the introduction. Basically, our team at Invest Hong Kong works very, very closely with Helene's team at Fintech Association. Essentially, Invest Hong Kong played the part as the super connector within the public sector in Hong Kong for fintech, whereas for Helene's team at Fintech Association, they are our major counterparts to essentially extend and reach out to the major stakeholders in the private sector. So we work very, very closely. So over the next, I would say 5-10 minutes, I just want to give everyone on this call a background of the fintech ecosystem and a more high-level perspective, and then I would turn it over to Helene to share with you some of her observations from private sector, particularly the more interesting cases of the successful fintechs in Hong Kong. So with that, perhaps I will start with. Thank you. All right, so I think to start with, just want to give you a snapshot of the fintech ecosystem in Hong Kong. I won't go into the details in the interest of time. A few numbers to highlight. Now, number one, you see the number 600. So that's the number of fintech companies that we have in Hong Kong. Now, 51% of the companies are interested to expand using Hong Kong as a launchpad into the GBA, and then 53% would like to expand globally. Now, the one number that is quite important is that 76% of the surveyed fintech companies in Hong Kong actually have been focusing at the B2B space. So this is something that is quite important to know. Now, since a lot of fintechs in Hong Kong are actually focusing in the B2B sector, I think this is another slide that could be quite useful for folks on the call. That you can see that the B2B environments in terms of number of banks, over 160 of them, number of insurance companies, the number of asset managers. So all these numbers essentially should give you a sense that despite just a city of 7.5 million people, but that the B2B environment is enormous. So almost all the major banks you can think of, essentially the latest survey, we see that 76 of the world top 100 banks actually have a major presence in Hong Kong. So this just speaks volume about the B2B opportunities in the market here. Now, obviously, it goes without saying that the whole GBA is a major opportunity that a lot of folks around the world are very interested. From a population standpoint, 71 million people, 1.6 trillion of GDP. I think in another 10 years, we're talking about doubling the GDP, an enormous market in its own right. Now, I won't go into details here, but basically this slide is meant to get across about the various support that the Hong Kong government put forward in helping the tech companies, including fintech, to succeed throughout the entire journey, from top to bottom, from setting up the company to R&D development, to hiring, business development, fundraising, overseas expansion. So there are multiple schemes that essentially can help you along the way. We basically did a tallying that if a company coming into Hong Kong and is eligible in getting all of these schemes, so all these schemes combined would add up to a total amount of 20 million Hong Kong dollars. So this is roughly around 2.5 million US dollar of various government subsidies to make you successful. Now, of course, I think Hong Kong is also known to be a major financial center. That on the left-hand side, you can see that in the last 6 years, in the private VC sector has contributed $1.5 billion of VC money in the early stage of investment for the fintechs in Hong Kong. On the right, you can see that Hong Kong has been the #1 IPO market in the world for 7 of the top past 11 years. And just for the fintech sector alone, the public market has helped raise over $10 billion for the fintech companies in Hong Kong. Now, this is a snapshot that we took from a paper published by FSDC, which is the policy organization in Hong Kong. So FSDC essentially from back in 2017 had identified a number of areas for Hong Kong to focus around fintech. So top to bottom, you can see like banking, capital markets, wealth management, insurance. These are the 3 main sectors of early adopters of fintech. Now, at the same time, for the drivers, enablers, the cybersecurity, the payments, digital ID, RegTech, these are, I would say, the peripheral enabling technologies to help these major sectors on the top to thrive in this whole fintech evolution. And at the bottom, those are all the other supporting factors from digitalization or the regulatory aspects, and also the, I would say, the expansion of the usage of APIs. Now, so with that in mind, so these are the things that have been the major focus of Hong Kong as a market since the year 2017. Now, so over the next few slides, I just want to give you a sense about what are the more exciting new developments in Hong Kong that I'd like to bring to your attention. Now, first of all, if you follow the news in the crypto space, you might have come across some media coverage that the SFC, which is the regulator in Hong Kong, that in a way sort of regulates around virtual assets, that they, in November of last year, that the SFC has launched this new regulation around the crypto exchange, aka the virtual asset trading platforms. So this is the big news because this just from the folks in the market, this is a fabulous regulation that offers a lot of vigor, but at the same time, a lot of flexibility for companies interested to really grow in this virtual asset space while having some, I would say, world-class, robust regulation to lend legitimacy to the operation. So this is a big deal. So this year, since the regulation was launched last year, so this year, 2020, is the time that a lot of companies are applying for the license. So we hope to see somebody getting the license very soon. So stay tuned on this one. Now, another development that you might have come across is the whole CBDC. So the central bank digital currency developments. Again, this is basically capturing a lot of imagination and media coverage. And of course, I think China and Hong Kong being part of China have been on a lot of the headlines that we're already in the pilot stage. That obviously mainland China already has 4 cities already launching the digital currency for electronic payment purpose. And then for Hong Kong, we also launched pilot with the PBOC, the People's Bank of China, with the pilot study, and also another collaboration with the Bank of Thailand in using digital currency as a means for B2B transactions. So another study is being conducted in collaboration with Bank of Thailand. So things are moving quickly in this space. Now, another interesting development is that MSCI has recently, back in the end of May, made a major announcements that it has appointed the Hong Kong Stock Exchange as its partner to launch various futures and options contracts. Now, so this is important from a standpoint that the Hong Kong capital market in its own right is already the 3rd largest in the world. So enormous liquidity, enormous fundraising capabilities. Now, at the same time, with this new partnership with MSCI, so this is adding another element, another dimension of the options, the derivatives markets to make, I think, the financial market even more robust and richer. So last but not least, there's just a lot of things happening, but just want to pick some that might be of interest to you. to you all. Another interesting development is obviously about the GBA. So the HKMA, which is the de facto central bank of Hong Kong, and also the regulator for the banking sector, has recently, just the end of June, make a public announcement that the Wealth Management Connect scheme is already well underway. Of course, a lot of the details are still to work out across the different jurisdictions, the Hong Kong, the Macau, and obviously other sister cities in the GBA like the Shenzhen, the Guangzhou of the world. But the framework is already there. It's just a matter of laying out some of the details. In essence, this is an enormous development allowing the mainland Chinese customers in the GBA, 70 million of them, to access the international financial products being offered through Hong Kong. And at the same time for international players to use Hong Kong as an entry point to get into the GBA, essentially to offer different financial products. Now, at the same time, you can also access the RMB, the renminbi assets offered in China through this two-way setup. So I think the other thing that I just want to quickly highlight is the fact that how can we help you to enter the Hong Kong market? Okay, so this is essentially some of the major players, the major stakeholders that we work very closely with. Obviously, on the left, we have the Fintech Association headed up by Helene, the W Hub, the Singapore Science Park, which are the two major accelerators in Hong Kong, funded by Hong Kong governments. The ASTRI, which is the largest R&D center in Hong Kong, HKPC, which is another one that's facilitating the support schemes in Hong Kong. On the right, you have the three regulators, Hong Kong Stock Exchange for the private capital fundraising. So these are the major stakeholders that Invest Hong Kong work closely with. So when you have any question about coming into the Hong Kong market, we are normally the first entry point to talk to you, and then we are able to facilitate further introductions to the other major stakeholders to address your various needs. Now, of course, I think the Hong Kong Fintech Week is a major platform, is a major conference in Hong Kong intended to facilitate more international collaboration and sharing of information. And the upcoming one will be held in November the 2nd through the 6th. We'll have both the physical elements as well as the virtual elements. So we look forward to having you to join us at this major conference. And these are some of the numbers from last year. So last year at the physical conference, we had like 12,000 attendees, a lot of international speakers, exhibitors, and business matching meetings, and so on. Now, so with that, I guess I just want to use this to lay out the sort of the overall landscape to just give you a baseline. And with that, I would like to turn it over to Helene, who can share with you about the other interesting aspects in the private sector. So Helene, off to you.
Sure. Thank you, King. I think before I go into some of the slide sharing, there's interesting synergy between Hong Kong and Dubai in the sense that we're both small city. Dubai is a small city state. Hong Kong is a small city administration zone, but both with huge ambitions and very proven market capabilities, both in terms of the capital market size and the fundraising capabilities. I just want to have a couple of slides of a deeper dive into what King and Salman were saying just now. I think the reason why Hong Kong is a natural hub for fintech is because it's one of the largest financial center in Asia, and it's very well positioned to reach not only North Asia and Greater China, but also Southeast Asia as well. We are equidistant between North and South Asia. There's a very strong talent pool and a very ideal B2B kind of platform. So, in terms of the startup business models, as King was saying, most of them are B2B, about 67%. When we last look at the 2019 FinTech white paper published by the W Hub, with B2B to C taking another 45%. So B2C still remains like the minority stream in this. Now, the target markets, as you can tell, are pretty broad. They reach almost, most of the regions in the Asia Pac area. and even in some of the AMESA area as well. Now, the technologies used by fintech startups in Hong Kong are largely AI. Part of it are blockchain, cloud, but you will find that actually some of the biggest unicorns that have been homegrown, including SenseTime, which is already like a decacorn deploying biometrics. WeLab, just got awarded one of the 8 virtual banking licenses. BitMEX, one of the world's largest digital currency exchange platform, and TNG Wallet, that is a major player in terms of cross-border payment solutions. All these really form a whole spectrum of different fintech solutions that you can actually find in Hong Kong. I won't go into detail here. King mentioned already some of the key initiatives that the regulatory bodies like the Hong Kong MA, the SFC, the Insurance Authority, and others are doing. But there's a very robust program that helps fintechs to run some of their proof of concepts through sandboxes, as well as some of the accelerator platforms that help them fast track their growth. And here is really a snapshot of the different timelines from 2016 to 2019, where I think is really a very robust growth period throughout all this. Now, having gone through all that, what I'd like to share as well is that there are a couple of very interesting cases of how Hong Kong has collaborated with, globally, really with key players around the world. You might have seen that SoFi, the big, Silicon Valley, brokerage or robo-advisory giant, have recently, through an M&A, a merger acquisition, broadened out to Asia-Pac by acquiring 8 Securities, which is one of the homegrown robo-advisory platforms in Hong Kong. Now, that has enabled SoFi not only to have a foothold in Hong Kong, but using Hong Kong as a springboard that allows it to penetrate other markets in Southeast Asia and across Asia-Pac. So that's a really interesting collaboration example I'd like to draw your attention to. There are a couple of other examples around wealth tech and reg tech that are really big verticals in which, as a financial hub, Hong Kong is very much a key focus in the area. So you will have a lot of different reg tech and wealth tech firms offering from online brokerage to KYC, to AML solutions. So, there are big players like Quantifeed, Air Wallets in terms of payment solutions that has a huge hub here. And they also find a way to partner with different financial institutions. People like SC Ventures from Standard Chartered Bank, people like Visa that has a big fintech acceleration platform, particularly for gender lens investing. So they have made a point of investing in startups that have at least one female co-founder or founder. And I think that actually provides a lot of interesting opportunities for everyone, to come into Hong Kong and to take the position that there are so much collaboration opportunities. As Salman was saying, collaboration is probably the new competitive advantage. You're not so much competing against each other. I think we are all competing against time. How we can go further, faster is probably the name of the game, whether you are a big FI or a fintech startup. And I think Hong Kong and Dubai, there are natural synergies for the two city locations to collaborate and join hands on a lot more other initiatives, as King was highlighting and as I was just sharing a little bit. We're very happy to take questions from the audience, or to have Salman's view as well, chiming in from what are some of the kind of opportunities that maybe the DIFC would see, now that we've gone through a little bit on this, the kind of landscape from Hong Kong.
Well, thank you, Helene, and thank you, King. I mean, there's so much there. I really love the themes that both of you outlined, ranging from King's views on kind of the structures in place that enable all of this innovation to your assertion of specific areas in reg tech and wealth tech, and your references to SC Ventures and SoFi. I mean, there's so much to talk about, but maybe just to get the conversation going, let's stick with the theme of some of our similarities, and maybe a place to start is maybe if you could help give us some examples. I'm thinking of ways in which the top down has from a strategy perspective and a development perspective has come up, with the bottoms up in terms of talent. So in other words, I mentioned Dubai having a strategy where the government was pushing a lot of the digitization agenda, as it were. Curious to see. So Hong Kong, obviously, a larger talent market, closer to large talent pools in Asia. What's been your experience in kind of top-down, government-pushed or led development? And let's, love to hear your views there.
Okay, so I guess the one thing I just want to highlight is that when we, as I just briefly alluded to, Hong Kong government put together a paper back in 2016, 2017. They laid out a strategy for the next 5 years. So actually, by the end of this year, we would have to recap how far we have progressed. Now, but then when we look at this in a way, top-down strategy, so to speak, interestingly, in fact, I just read that paper again just recently to see how much of the recommendations in that paper have already been achieved. Interestingly, I would say, I haven't tallied, but just based on just eyeballing all these major headlines, I would say that over 80% of the strategic goals have been achieved already. So either already implemented or adopted by the industry. So I think it's quite, to be honest, Hong Kong has always had the reputation of being like laissez-faire policy kind of market, so market-driven everything. But with this sort of like strategy laid out by government and actually having it be adopted by industry, I mean, it's something that I'm actually pleasantly surprised and amazed. So maybe I think Helene can comment from the sort of industry perspective.
Sure, happy to do so. I think as King was just saying, there's a top-down approach that government is paying a lot of attention to building the talent pipeline. But I think if I can echo that, there are also a lot of initiatives across the finance industry that gives accreditation modules for finance industry professionals that would need it for renewing their licenses, and also which the Fintech Association is collaborating closely with. So in Hong Kong, we have the Hong Kong Securities Institute, for instance, that is an accreditation platform. And apart from just the normal kind of, KYC, AML, and all those modules that you would expect any accreditation platform to run, they also paying attention to a lot of other more forward-looking things like green finance, such as sustainability development, and so on. So these are also areas that we feel technology has a real role to play. And those are some of the areas whereby we collaborate very closely with them from a bottom-up kind of perspective, because we hear that loud and clear across capital owners as well as the finance industry as intermediaries.
So very interesting. I'll come back to your the important issue of your Hong Kong Securities Institute and the issue of accreditation, because as you and I have discussed earlier, the idea of talent development is critical, and we have our DIFC Academy. But I'll come back to that in a second. You mentioned capital, and the question I wanted to ask both of you is, a few years ago, it became clear to us that in addition to regulatory development and soft infrastructure, that at some point we needed to put skin in the game, which was to be able to provide, be willing to invest and provide capital to invest in startups, and B, provide a platform that entrepreneurs could use to access their own capital. And that has proved very successful for us, in that we announced a $100 million fund several years ago, and by the end of this year, we're going to scale it up to 300 million. I want to ask about, now Hong Kong is probably a different market, lots of private liquidity there. What has your experience been with funding and supporting? Is it organic? Is it come up from your VC community, or is it subsidized government, top down? How does it look over there?
Helene, why don't you go first?
Okay, sure. I think there's a mixed batch on fundraising, Salman, really. There's a very active VC community, but we're also seeing very active family offices as private investors who are, interestingly, looking at different opportunities across fintech, sustainable finance areas for investing. Whether it be directly into a fund or it be direct investments into startups or different companies. So there's a mixed batch of that. There are government funding programs, but I would say that there's also a lot of organic kind of private investors that are eyeing this area and hunting opportunities, and sometimes even co-investing opportunities, which could be something interesting for the Dubai investors to look at. Alongside, the local investors here, because probably, with the local investors having more, easy access to doing due diligence or knowing some of the companies here a little bit more up close, and easier to do the due diligence, it might be opportunities for co-investing.
Very interesting.
Well, I just want to echo what Helene just said. The public and private sectors have been working very closely. Just now we mentioned about the Science Park and Singapore Port, so the two Hong Kong government-funded organizations. So on the one hand, they are like many other accelerators. Now they're providing a lot of services, the real estates, for the startups to be there. And at the same time, both of them already set up their own fund several years ago. So there will be, so the Singapore has the macro fund, and then the Science Park has the corporate venture fund. So typically the funds, the ticket size that they used to be investing in started from $1 million US and up. Okay. Now, so normally the way it works is that so these two organizations would do a investment with private sector investors. Now, and also, so anyways, this is something that's been happening all along. Okay. Now, I think the other thing that I would like to highlight is that the family office that Helene just mentioned. Now, actually, the senior folks in Hong Kong governments are making a priority to further foster the family office. Now, the reason are twofold. Number one, I remember there was a conversation I had with the general manager of the HKVCA, which is the largest VC PE association in Hong Kong. And I was told that organization is the longest running in Asia too. And interestingly, according to the general manager, Joanne, actually the AUM, the money managed by all these VC and PEs in that association amounts to $2 trillion US. So just a lot of money there. Now, the only issue is that, to be honest, I think some of the family offices may not be too familiar with fintech. So that's why there's a recent development that both private sector and as well as public sector are trying to host different sessions to, in a way, sort of educate and share more of the latest developments of fintech, including the case studies of how the companies perform, also exit successful cases that Helene just mentioned to the family office, who are oftentimes the second or third generation of the major tycoons in Hong Kong. So again, this is happening. So we anticipate that there will be more involvement from the family offices in investing in the fintech domain.
Yeah, and then I could add to that, Salman. Let's not forget the big financial institutions. Most of them would have an arm in innovation and investing or partnering with fintechs. For them, the strategy is either buy or build, and probably both buy and build, because there are certain things you might be able to build, but there are other things that it might be more cost efficient to actually acquire some existing solutions providers. So I think there's also that angle to it as well, if I may add.
So you probably noticed I was nodding, aggressively when I was hearing both your comments, because I feel like even though our markets are obviously different in many ways, this is a common theme. So let me give you a parallel to the story that you've told of family offices, right? The regions that we represent here in the DIFC, Miasa, or the Middle East, there's something like $7 trillion, plus or minus a couple of hundred billion, of course, of private capital. And it's actually the same order of magnitude as the sovereign capital. So roughly 7 trillion of sovereign, 7 trillion of private. Obviously, the sovereign gets most of the attention, but there's this vast amount of capital that's slushing around here in this market. And the second piece is that roughly a trillion of that 6 or 7 trillion in the family office space is undergoing intergenerational wealth transfer. And so in the case of our regions, that is Gen 1 to Gen 2 and sometimes Gen 3. And we're finding an increased interest. It is that Gen 2 going into Gen 3 that is now becoming the source of a lot of growth capital. Certainly, our venture community is growing very aggressively, and we're revamping our venture regs to accommodate that. But some very interesting parallels. And I have heard people argue that family capital, it's a very interesting trade-off. On the one hand, you may not have necessarily all the expertise that a classic VC might have, but you have, it's more sticky and it's less capricious and it's there for the long run. So I thought that was very interesting.
Yeah, absolutely. If I could echo that, in my private banking days, I was actually running a lot of these next gen, quote unquote, for lack of a better word, programs. And I think probably what every financial institution and every market is waking up to the fact, not only that there's a huge, trillions, being transferred, but they look at investments quite differently from the first generation. And I think they also look at how to deploy the capital, what they are most keen in terms of investing very differently. So I think that is probably an angle. Tech, as well as sustainability, I would say, are the two angles that shapes the second and the third gen in terms of their investment appetite and indeed their risk appetite. So I think it will be very interesting to see how this plays out in the next 5 to 10 years, because I think that would have a huge impact across most of the major capital markets, Dubai and Hong Kong being two of the primary examples.
Okay, great. One thing that I was thinking about as King was talking about kind of the macro environment, and you were talking about the success of some of your regional and global tech companies, is this notion that both Hong Kong and Dubai DIFC are pursuing, which is scale. Now, for us, it comes in a different form than for you. For us, scale, it means access to very, very large adjacent markets, including places like Saudi Arabia, all the way to North Africa and South Asia and parts of traditional Africa. For you, I was looking at the slide that King shared on GBA, and to me, it seems like there's some interesting parallels. I mean, that itself, putting aside mainland China, just GBA itself is kind of our equivalent of that scale. It may be useful to get your views, both of you, on how you get to translate that amazing market opportunity from a population perspective into tangible economic growth.
Well, first of all, as we all know, just even from just watching the public, the media, that I think China is very measured in its approach in opening up the market, particularly the renminbi, the nationalization journey. So as a result, I think Hong Kong, 30 years ago or more, have been always used as that gateway. But slowly but surely, Shenzhen got opened up, which is adjacent to Hong Kong, and that basically has been going really well. So Shenzhen, in fact, last year the GDP already surpassed Hong Kong because of the enormous tech industry there. Now, so as that opening up has been going quite well in Shenzhen, so that experiment has further opened up to encompass like a bigger area, which is the map that you can see here. That encompasses all in total 11 cities in southern China. So in a way, this is a sort of this is nothing new. This is my point. Is that this is just an extension of the sort of opening up or experimentation of China in a way in connecting to the rest of the world. It's just bigger at this time. Now, and then what does this mean from opportunity standpoint? As I just mentioned, it goes both ways. It can be for the international players that would like to offer financial products to the mainland Chinese. There's 71 million of them, 1.6 trillion GDP. It's from outside in. It can be that way. But at the same time, because obviously nowadays, with I think the whole world going through a major transitional period, sometimes there's also the argument, if you follow money flow, there's a significant amount of money flow getting into the renminbi assets. For example, the renminbi bonds, the Chinese bonds, so which 5 years ago, this is unthinkable. But nowadays, this is what's happening this year in particular. A lot of the international capital is now buying up the renminbi bonds. So now I think for folks who would like to diversify the portfolio, now the Chinese assets are accessible also through this GBA experimentation. So essentially, this is just a major experiment in which the story is to be unfolded.
Yes, absolutely. Just to echo what King was saying, I think connectivity is the single word that really describes the possibilities around the whole GBA. And connectivity in terms of capital, in terms of talent. So apart from the wealth connect that everybody was talking about, the flow of capital, foreign exchange between these different cities and Hong Kong that they're driving recently, there was established the bond connect and the stock connect that has run quite well in the past few years. So it's apart from all that, the movement of talent among all these, particularly between Shenzhen and Hong Kong, the two are really adjacent to each other. I think that whole movement of capital and movement of talent is really what defines the roadmap for the GBA.
Okay, so look, Helene and King, in the last 7 or 8 minutes, in the final stretch, I thought maybe we would pivot a little bit informally towards this area of opportunities, discussion of opportunities. We had, I want to say maybe it was 10 days ago, or maybe 2 weeks ago, we had a great conversation with one of your colleagues, Jihan Chu from Kinetic Capital, Hong Kong based. And it was really eye-opening because we learned some things about, obviously, the depth of talent in the DLT space. And we talked at length about multiple opportunities, particularly in the digitization of assets, including real estate and others. And so now I want to ask a broader question as we look at our markets. I mean, one of the visions that we have is that technology and innovation companies here will consider, when appropriate, the opportunity to come to Hong Kong for Hong Kong and, let's say, GBA for technologies that can compete and are relevant, and vice versa, that you will have scores of companies that will at some point look for expansion into diverse markets such as ours. And of course, we hope that exchange continues. So the question, I guess, is, as you start to look at our markets, what are the specific areas you think of, and Helene has mentioned a few of them, of opportunity? So we've talked about blockchain as a particular area of expertise that we see a lot of talent in Hong Kong. You talked about RegTech, you talked about wealth tech. Maybe we can open up that conversation, talk about the exchange.
Well, perhaps I just shared one example to put this conversation in context. In fact, just now you reminded me of one of Jihan's invested companies. It's called Liquefied. So Liquefied, they basically tokenize real estate. So obviously, the Hong Kong being a major property markets, he basically got the first few cases on his belt from Hong Kong. But then his ambition is not just about Hong Kong. And then the next market that he reaches out, as you may know, is the Gulf States. So he actually got some investment from the royal families. And then using that as another accelerator, if you will, I read in the news that he was able, through the connection from the royal family in the Gulf States, he was able to get his hands on the Mayfair Hotel in London, where he can tokenize that assets. So I think this is a great story in terms of how I think a Hong Kong-based blockchain / the next generation fintech company can work with open-minded investor in the Gulf states like Dubai.
Yeah, I think that's a fantastic example. I was going to shift the focus a little bit towards something that has really been hot in Hong Kong, and I think probably there are some reference points that Miyasa region can take a look at if it's of interest. Is virtual banking, the open APIs, how you can actually use that whole open API framework to drive some of the financial institutions, to the next level. Because the virtual banks actually they're not competing head-on with the traditional FIs, with the traditional banks. They're opening up new avenues of customer experience and new avenues of interaction that probably a traditional FI can look at adding on or bolting on to that. So I think that whole area of open API and virtual banks, where Hong Kong has a lot of experience in a way by now. 3 of the 8 licenses are now either launched or soft opening or soft launching. I think will be an interesting area for Dubai financial institutions and investors to look at as well.
I would concur. I'll just make a brief comment. I think we are along that path, but at a different stage. I think for us, we've seen an explosion for the last couple of years of, let's say, digital and online banks, which thus far have been either extensions, JVs, or subsidiaries of existing banks. But nonetheless, they have pushed the envelope in terms of the front end, the client experience, the user experience, both in mobile and in traditional kind of tech. They've also streamlined the fulfillment process digitally really, really well. I think our path, pending the outcome of consultation that the regulators are in the process of, is probably going to go via the route of the payments business. So in other words, for us, once we scale up that space, and I'm proud to say that the DIFC and our regulator, the DFSA, is leading the way here when it comes to payments and money services. I think when we get that up and running, we already have digital onboarding right now at the DIFC and the DFSA. When we scale up the money services business with all of the required KYC, AML, digital onboarding, I think it's going to pave the way for imminent, proper digital banking and open banking on an API basis. So I'm really excited, but I look forward to exchanging notes with both of you along that journey. Look, we're almost at the end of the hour, so let's close with a quick request of both of you to maybe sum up your key messages and your takeaways for the audience. Helene, let's start with you.
Sure. I go back to my point of collaboration, because I really believe if there's anything that technology has really reshaped the landscape for everyone, around the world, it's that the need to collaborate far exceeds the reality to compete. We're not here to just try to have cutthroat competition. The more we can leverage the experience and the strength of each other, the better we are to go forward. So I think collaboration is the next competitive advantage.
Well, to me, I guess the key is being open-minded, because obviously we're in this stage in the world history that a lot of the unthinkable are happening. So obviously we are now in this stage that we have also got an opportunity to rewrite how some of the old ways of doing things will be done in the future. And the reason why I say this is because when I was looking at this study from Medici research, in which they look at the status of, for example, CBDC, which is a very hot topic, and I actually recognize that the UAE is already one of the early adopters of digital assets and also digital currency. So obviously, China, Hong Kong are also the early adopters. So who to say that we cannot be the early adopters in working together in terms of, let's say, cross-border transactions, payments, using a totally new infrastructure. So I guess being open-minded in terms of working with like-minded, pioneering partners will be something that we want to strive in achieving.
Well, that's a great note to end on. I want to thank both Helene Lee, who's GM of the Fintech Association of Hong Kong, and of course King Leung, who is the head of Fintech at Invest Hong Kong. I think all of your points are well taken. I think the spirit of cooperation, the spirit of exchange, I think is going to be very, very important going forward. There are so many more topics that left to discuss, which means I think we'll have to organize another one of these sometime soon. So thank you again for your time and your knowledge and your views. Look forward to speaking with you again.
Thank you for having us.
Thank you. Yeah, it's a great pleasure. Okay, take care.